And Gordon,
They say they're
when
selling
do you
car
expect
wrenches. That's not really car wrenches.
$87 to hit? When is that? Is that 12-month target?
That's a 2021 year-end price target. So that's next year. We believe by the end of next year, Tesla's price will be at $87 per share.
Yes! He's back. What up, guys? Welcome back to Financial Firefly. My name is Fernando, and that was Gordon Smith back on Yahoo Finance, the ticker, selling his short position of $87 a share for Tesla stock. I was in need of a good laugh. Let's get into it. But first, hey guys, don't forget to start your investing journey by claiming your 2 free stocks from Webull, one of which could be valued up to $1,400 when you deposit $100 or more, possibly 1 free share of Apple, Microsoft, or Facebook when you sign up with Robinhood, and your $10 when you sign up and deposit with M1 Finance. Comment down below to tell me what you get, links in the description. Let's get back to it.
All right, we have been talking about it all morning long. Tesla shares are under pressure after its record rise to $2,000 a share last week. But was this run-up warranted? Our next guest says, nope. Gordon Johnson is founder and CEO of GLJ Research and a longtime Tesla bear. Gordon, good to speak with you this morning here. What is your price target on Tesla right now and why?
Yeah, our price target is $87 per share. That's a 2021 year-end price target. And listen, Tesla is detached from reality. It's trading at more than double VW's market cap. Yet VW sold 11 million cars last year. Tesla sold just under 370,000 cars last year, looking to sell roughly 500,000 cars this year. In a nutshell, Tesla is essentially a busted growth story. And I know that sounds crazy to people looking at the stock. Their U.S. sales peaked in the fourth quarter of 18. They haven't had higher U.S. sales since the fourth quarter of 18. Their U.S. gross margins peaked in the third quarter of 18. Their global sales peaked essentially in the fourth quarter of 18. And you're looking at a company that, excluding credit revenues, which are one-time in nature, and we know next year is essentially will essentially drop to zero for them. In the second quarter, they lost $300 million. Now, listen.
Where do I begin? Gordon, you are so wrong. Sales are actually increasing in the U.S., but besides that, they're a global company. They can ship all across the world. Australia, EU, Asia, China. They're really manufacturing and ramping up. It's not slowing down. And gross margins are essentially going away for EV tax credits? I don't think so. Those things, while they are dwindling, they're not going away. So essentially, you're wrong.
We had a tulip bubble, right, 100 years ago where people kept buying tulips, and because they were buying, they kept buying. But here's the reality. There's an analyst note out today saying Tesla's seeing strong growth in China. The reality is, in the month of July, they sold about 11.4 thousand cars in China. They produced about 12.2. So they actually built inventory, and that's despite 8 price cuts globally this year, 4 of which were in China. So they're cutting the price of the cars. They have another facility in China, and yet they're selling less cars.
Okay, let's break this down. They're ramping up production in China because of increased demand. They have more cars that they're sitting on the lot than they delivered because guess what? People don't live in the factory. They go and have the cars delivered to them. So obviously it's not going to be from the factory to the doorstep every day. On top of which, reducing the price is broadening your market so you can have wider market access to people with more shallow pockets, increasing your customer base and thereby increasing your revenue. Let's continue.
So we think reality is much different than what is being pumped out there. And we think the stock price is driving analyst opinions, which is the founding to us versus reality.
Gordon, let me ask you, listen, I was a stock analyst, a sell side for over 10 years. You have an $87 price target on Tesla. The stock is now over $2,000. How can you keep that call in place?
Well, I mean, it's simple, right? It's their earnings times what I think they're going to grow long term. So
you actually, real quick, on earnings, this year you're looking for a loss of $1.58 per share. The street's at about $8.70. Why are you still looking for a loss? I mean, the way I think about it, you're looking for a full-on meltdown in the back half of the year.
Right. It's not even a meltdown. Again, they sold 400. They're selling credit. They're recognizing sales on credit revenues based on their financials that they haven't even sold yet. So they're recognizing credit revenue sales on cars that haven't been sold. We don't know how they're doing that, but they're doing it. We're not saying it's wrong, but we'd like a better explanation. But again, keep in mind, over the history of Tesla, I think it's like 32 quarters. In only 3 of those quarters, actually 4 of those quarters, 4 of 32 quarters, have they actually had a positive net income excluding credit revenue sales. That's essentially taxpayer incentives that they're getting for selling credit revenues to other car companies. The problem is all of those car companies are now selling electric cars. And Tesla is guiding their credit revenue sales to be down 50% in the back half of this year. So it's not a meltdown. It's just their core business is loss making. There's no doubt about this. If you take the credit revenues away, they lost $300 million last quarter.
And Gordon, when do you expect $87 to hit?
Companies are now selling electric cars, and Tesla is guiding their credit revenue sales to be down 50% in the back half of this year. So it's not a meltdown. It's just their core business is loss making.
Their core business is loss making. Imagine this, having profits and reinvesting them into business to make the business grow, Gordon. Imagine having tax incentives, a pot of money available to you, and you access it to grow your business. Imagine that you have a customer base with a far superior product than your competitors, and you're claiming that their sales and their business is going to melt down. They have increased margin on each car. The cost reductions are clearly coming into play. The increased efficiencies are clearly coming into play. And you still have a loss of $1 per share when they've posted 4 consecutive quarters of profit. Something's not adding up here, bud.
There's no doubt about this. If you take the credit revenues away, they lost $300 million last quarter.
And Gordon, when do you expect $87 to hit? You know, when is that? Is that 12-month target?
That's a 2021 year-end price target. So that's next year. We believe by the end of next year, Tesla's price will be at $87 per share.
He believes by the end of next year that Tesla will evaporate. Like, what the hell is this guy thinking? $87 a share? My dude, it was at $200-$300 a share late last year, and that was when they still only had a couple quarters of profitability, and now they have a full 4 quarters of profitability, S&P 500 inclusion, increasing market margins, strong global demand, increasing technology, lead in technology. Where are you getting this from?
Playing the bull scenario, though, what about bulls that say, look, this is really a technology company. You can't think of this as an automobile company. This is about software. This is about the battery. What do you make of that argument?
Right. So that's been the argument, for the past 5 years. Here's the reality on the battery. They have a battery day 922. Tesla buys its batteries from Panasonic, LG, and CATL.
Partnership.
Let's go to Panasonic. Panasonic makes cylindrical batteries for Tesla. Anybody can buy those batteries, but nobody's buying them. If you look at CATL said they're going to have a 1,000,000-mile battery. This was something that was rumored that Tesla was going to come out with on Battery Day. Anybody can buy CATL's battery.
They're not going to buy the 1,000,000-mile battery.
And LG Chem just announced they partnered with GM to develop new batteries. And then if you look at what Toyota is doing, they're focusing on solid state, which is the next generation. There is no secret sauce. Tesla does not make its own batteries. That has been a wide misconception for a while. And if you look at their technology, the FSD, full self-drive technology, Navigant ranks Tesla dead last. Tesla uses radar. The technology that everybody else uses is LiDAR. And we don't think it's a chip issue, right? Elon Musk keeps coming out 2.0, 2.5, 3.0, 4.0. He keeps pushing out when there'll be full self-drive technology. We don't think it's a chip issue. We think it's a software issue. They're using radar versus LiDAR, and we don't think they're collecting the miles. We'd like to see where they're spending the money to collect those miles. Listen.
What are you talking about? You're totally wrong. You have nothing right. Everything you're saying, it doesn't add up. It's literally the opposite of everything you just said. They make their own batteries. They're pursuing solid state. They have the best chips in the world, the best software in the world. What are you on, Gordon?
If Tesla is the technology leader, why has their R&D spend as a percent of revenue dropped from roughly 12% in 2017 to 5% thus far this year, the lowest amount ever in the history of the company? We think there's a lot of misconceptions out there. If you look at what the specialists and the people out there who actually rank the technology says, they say Tesla's dead last, and we think there's real risk to that whole theory and thesis. They increased the price of their full self-drive technology recently, and their sales of FSD in a number of different countries have fallen by 50%. So again, when you say that we're projecting a collapse, no, we're just projecting that they're going to do less credit revenue sales, They're saying themselves their credit revenue sales are going to be down 50% in the back half. They drop to nearly 0% next year. And when that happens, we think the company goes back into structural losses. Again, without credit sales in Q2, they would have lost $300 million. So
Q2 was very tight. Not to mention, they posted increased global demand, increased deliveries despite a 3-month shutdown in Fremont. I don't know what this dude was going on about. Sandy Munro, one of the most critically acclaimed reverse engineers in the world, and automotive engineers really, is a huge Tesla fanatic and has been absolutely swayed and overwhelmed by the ingenuity by Tesla's engineering and innovation. What do you mean they're last in technology? They're literally first. Number one.
it's just a huge disconnect, reality versus what people are saying.
Gordon's reality, actual reality. Gordon's reality, actual reality. Not the same thing. Maybe he's just spewing out all this nonsense because he has a short position. Maybe he has a financial interest in the value of the stock going down. Maybe he's not this dumb. Maybe he is.
Again, there's an analyst out today saying China's sales are great. The real data, July data, shows that they're selling less than what they're producing. So it's just the real data doesn't match up. We think when that matches up, you're going to have selling that we think drives the stock lower.
Gordon, how long are you willing to sit with this call? Because now I'm looking on to 2021. The street is looking for about close to about $15.50 per share in earnings. I mean, they're selling cars. They've had 4 quarters of earnings. How long are you willing to sit tight here?
Right, but I just want to stress, you can't say they had full quarters of earnings without understanding where those earnings came from. Those earnings.
But it doesn't matter. They still had earnings.
They still had earnings. Earnings are earnings. They're claiming a pot of money, an incentive that is there for the purpose of transitioning the world to electric vehicles. Why? Because we're killing ourselves with carbon.
Credits. Those sale of credits, they say, are one-time in nature. So if you have to look at what they're doing and what they actually do. They make cars and the profitability on them making cars. Their auto gross margins peaked in the third quarter.
But why should they be penalized? That is still part of their business. Isn't that something you do plug into your model?
No, that's one time. So they're saying listen, the only reason they're selling credit sales is because companies weren't selling EVs. Now every single company, VW, Porsche, GM, Ford, Renault, every single company is selling EVs, so they no longer need to buy those credit revenues, those credits from Tesla. So those are revenues that are going to go away. Those are 100% gross margin revenues that are going to go away essentially next year, be down 50% in the second half of this year versus the first half. So when you say, is that part of their business? Any business that is structurally dependent on taxpayers essentially giving them money versus being profitable in their core business, we don't think it's sustainable. So when you say, how long am I willing to sit with this call? Let's see if they print a profit, right, in the fourth quarter of this year, and let's see how their earnings trend next year, and let's see what their deliveries come in for the full year this year, right? This company is trading at a growth multiple that suggests their earnings, their revenues, and their volume should be growing exponentially every quarter. We're going to get the numbers for 3Q. We're going to get the numbers for 4Q. I think they're going to disappoint. And I think with all this competition coming in, people compare Tesla to Amazon. I think it's more like AOL. They have technology that is outdated. You have new technology from automakers who are proven that are coming for Tesla's neck, if you will. And if you look at the EU, right, Norway, Netherlands, Spain, in the fourth quarter of last year, their market share was 37%. Quarter to date, 2Q, their market share is less than 3%. That's a market where you have real competition. So 37% to 3%. When have you ever heard anybody talk about these numbers? I don't think you have. So people are putting out, Tesla leads in technology. What technology do they lead in?
The numbers don't exist. He's making them up. The technology exists, and it's Tesla's.
They do not lead in technology. So I think when the numbers actually hit the paper and the credit sales go away, which even Tesla's got into a 50% decline in credit sales in the back half of this year, and you see those numbers, those losses start to creep back in. Again, 2Q, excluding credit sales, $300 million loss, I think the stock really starts to tumble. The point is, I don't think people understand what they own in Tesla. Everybody talks about this technology leader. They don't make batteries. The rate of last in FSD. But every time I talk, the question is, are they the technology leader? I don't think they are, and I think that's going to be proven this year.
They are a technology leader. They do sell every car they produce. They are increasing their gross margins. They are profitable without tax incentives, without COVID-19 and global demand. They are a leader in full self-driving. Did I say that? They are getting all the miles, the data. Their customers are literally paying them to collect data. Tesla has billions and billions of self-driving miles and way, way more than the closest competitors combined, which I believe is Waymo. What are you talking about?
All right, let's leave it there for now. We'll certainly have to continue to monitor this call and have you back to discuss it. Gordon Johnson, founder and CEO of GLJ Research. Good to see you.
Thanks for having me.
Wow. Well, thanks, Gordon. That was a nice little eye-opener of the street and the old dinosaur juice that you are drinking. You are wrong. And history will prove me right. Everything that he's spouting is absolute nonsense, and it's a nice laugh. A little bit frustrating that some people still maybe genuinely see Tesla this way, but I think it might just be short financial interest here. Who knows? It's Gordon Smith. I hope you enjoyed this video. Gordon has no idea what he's talking about. Another disaster of Gordon Smith spreading misinformation and propaganda about Tesla stock. I hope you enjoyed this video. Let me know what you think down in the comments. Is he right? Is he wrong? Is it go higher? Is it go lower? Who knows? He might be making a killing. I don't think so. Be sure to smash the like button, hit subscribe and the notification bell, and I'll catch you later, Fireflies.